Hey, I'm Adam Narreau, and this is your September 2021 real estate market update. Let's go. All right, we're not wasting any time. We're jumping right into these slides, so let's go. So this first slide we have here, this is the number of sold homes versus the number of new listings brought to the market. So the blue line is the number of new listings brought to the market. And for August, we brought a total of 481 new listings to the market, and we sold a total of 340 homes. And as you can see looking at this chart, since February, we've continuously brought more listings than the number of homes sold, which is a good thing. It's bringing us back towards a healthy market. So buyers, might be a good time to hop back into the market since we are seeing inventory increase. Sellers, if you've been thinking of selling and you want to receive the most amount of money for your home, I would do that sooner rather than later, because the more inventory that comes onto the market, the more options home buyers have, which means they don't have to offer above asking or waive all the contingencies just to get their offer accepted. So keep that in mind. All right, this is our next slide. This is the average days on market. And as you can see here, 22 days, still a phenomenally low amount of time to have your home on the market. 22 days, 3 weeks. And keep in mind, as long as your home's priced correctly, it's going to even be below 22 days. So the other thing I want you to look at right here is also the green line, which represents the sold price versus the original asking. And as you can see, we're still at 103%, which means homes are selling for more than asking. Now, how long is that going to last? Obviously, with the more amount of inventory that comes to the market, the chances of this are going to drop with every new home that comes onto the market. So, like I said, if you're a seller and you've been thinking of selling and you want to receive the most amount of money for your home sooner rather than later. Now, moving on. This next slide, this is going to give you more of an idea of how the market is actually going. So this green line represents the asking price, the average asking price of which homes are going on the market at. Now that number doesn't really matter because typically in any case, you can ask whatever you want for your home. That doesn't really matter. What matters is what the home actually sold for. And that's the red line. The red line represents the average sold price. And as you can see, for the last 3 months, we've been between $370,000 and $380,000. So prices are starting to level out. Even though they're starting to level out, we are still almost $80,000 above what we were just a year ago. So yes, most homeowners now are going to have equity. So if you want to take advantage of that, I mean, now would be the time. I personally think home prices are gonna level out like we've been seeing for the last 3 months. Now, how long is that gonna last? Nobody knows. But I think we're gonna see the leveling out for a while until either one, a mass influx of inventory hits the markets, or we see interest rates rise. So those are going to be the two factors that are going to determine what your home is going to sell for. All right, and this is our last slide, everybody's favorite slide. This is the months of inventory. And as you can see, for the past 14 months, we've finally hit a new high, which is 1.3 months worth of inventory. And this slide means if another home doesn't get brought to the market to be sold, we would run out of homes in 1.3 months, which is still really low. A healthy market for the Victor Valley area is going to be around 6 months worth of inventory. So we're creeping up, but we're still nowhere near a healthy market. All right, so there it is. That is your real estate market update for September 2021. Now, if you like this video, please go down, hit the like button. If you want to see more videos like this, hit the subscribe button. My name's Adam Narreau, and as always, I'll see you in the next one.